What you're here for is the fifth cohort of our Mastering Growth program. This is the fifth time we're running it. And this is all about holistic growth strategies that should help you come out with ideas to help grow your company faster, more smartly, and more efficiently. And this week's theme is around building a strong foundation for growth. And we're going to just kind of dive in. It's a quick intro, foundations of growth and growth-led development. And then we're going to completely switch gears and move into financial and growth modeling, which is very tactical. It's very detailed and it's a little bit complex. And so we'll leave that one for the second half of today. And I'll encourage you to kind of put in some of the homework on the growth model. So we'll dig into that as we go. Just really quickly, GrowthU, I mean, you're all here, members. We provide founders with frameworks and strategies for growth. We've got on-demand and live programs. This is one of those live programs. We also do weekly drop-in live mentor sessions. Some of you on this call are participating in those. All of you actually have access. So on every Wednesday and Thursday right now, my team and I hang out on Zoom for an hour and we basically just facilitate a peer-to-peer discussion. It's super fun. We call that our weekly live mentor session. So if you want more info on that, just reach out to one of us. We've got master classes, other community events, skills and needs analysis, and then bespoke training solutions for you and your team. We did start to get into a little bit of one-on-one hands-on help because a lot of our founders came back to us and said, hey, we've taken your programs. Can you also help us in the weeds a little bit? And so we've got some different options for that as well. We're now up to 9 programs, and I believe we're launching 2 in the next 30 days. But so this Mastering Growth program is kind of the most holistic kind of highest level program. But as you go through this, like next week's theme is customer acquisition. We've got multiple different programs focused just on customer acquisition, which get very, very into the weeds and into the details of channel-based marketing. We're going to stay up a slight level here for the next 5 weeks. This is our amazing team. So most of us are on this call. If you've got questions, reach out primarily to Aoife Dunn and Aoife Murphy, who are kind of behind the scenes work in the community angle and will be your support throughout the duration of this program. They're both in Slack. If you're not in Slack yet, go ahead and send a DM to one of them on chat right now through Zoom, or send an email to any of us, and we will get you added immediately. And we've all kind of got our different areas of focus, and you'll get to know us as we go throughout the program as well. But it's just an amazing team, and we're doing a lot of fun stuff together. And then in terms of testimonials, then I'm going to get right into it. We will we'll kind of share some of the stories that some of our members and founders have, but I just love this one. What we have set out to do with GrowthU is to effectively save you time in the decision-making process. Matt Johnson, who's one of the launch accelerator companies, said the hour I spent every week in GrowthU saved me 10 to 20 hours of trying to figure things out on my own and likely getting it wrong the first time around. I can't recommend this course enough. That's the type of thing that we want to hear. So we really value your feedback and input, positive or negative. Please send us feedback as we go. We want to make this program better. We want to keep rolling. And yes, Patrick, thanks for your comments as well. I'll kind of be monitoring chat behind the scenes, but I'm mostly going to stay focused now as we move forward, because again, there's a lot to cover. So program intro. I'm going to give you my quick synopsis of how I got here. So I started my career as an OK software engineer. I was a co-founder of a failed startup after that. Then I actually scaled 2 web development agencies. We won all sorts of awards, including Webby Awards. Like it was really fun to kind of be in the spotlight with some of those website builds we did. Then I had 3 more startups in the last 10 years were focused on growth and product, company growth and product development. I was a product manager, and I've just been in the weeds with startups at various different stages, from bootstrap through funded, some hyper funded. I've had over 200 founder conversations in the past 2 years alone on the Growth Mentor platform and other mentoring platforms, where what I'm trying to understand are what are the pain points that founders have. And that's effectively why I started GrowthU, was based on a need that I saw a ton of founders had in common, where growth really came down to like the 5 themes that I'm going to kind of teach in this overview. I'm a 2-time launch accelerator founder, took Red Tricycle and Votion through those programs. One of them was quite a big success, and one of them was basically a failure. So I'll kind of share that. And I've been involved in kind of 4 different M&A scenarios, nothing too crazy. Interesting, one of these was actually an agency. And so we will keep moving, but that's how I got here. And mostly I would say that I've tried to apply the lessons of failure into this program, because it really is through that lens that I think we get the most clarity. When you can honestly reflect on something that didn't work, and you're true to yourself about the reasons why, you can cover a lot of ground the next time you go and do it. And so that's what I set out to do here. So we're going to move into what I call laying a foundation of growth. And we're going to actually start with a little bit of that view of failure here. So I like to always say that we're founders and CEOs and growth and marketing people and product managers. We're kind of hustlers and entrepreneurs, right? And this leads us to kind of a bias towards action. We love to build stuff. We might be great at it. A lot of us started as engineers or as product people. We probably get a thrill from launching new things and kind of doing our thing. But then at some point, like once the appeal of kind of building starts to wear off, we start to wonder, are things going well? What's happening with our core metrics? Are we growing our business? What happens if we can't keep growing? And that fear starts to sink in, usually, after a few months or after a year or so of building our company. And when I looked at some of the data around why startups failed, these are some of the findings that CB Insights had put out there. So number one was kind of no market need, run out of cash, not the right team, got outcompeted. There's not a lot about the product here. And then Paul Graham in 2006 had this really great essay. It's still highly applicable around the mistakes that kill startups. Single founder, bad location, marginal niche. Some of these aren't as relevant nowadays, but many of them are still there. Raising too much money, raising too little, spending too much. And then looking at Startup Genome. So what Startup Genome does is they look at basically startup success and failure at a global scale, and they publish all these findings. And they actually work with like municipalities, cities, governments, and startup ecosystems and accelerators to try to figure out, well, what are the things that we can inject into these ecosystems to help the greatest number of founders succeed? Well, when they looked at failure, the companies that failed overhired, overspent, and were too much of a perfectionist when it came to launching and iterating on their products and on their vision. And they frankly just got to market too slowly. And so I just thought that these were really, really interesting because when you look at it, roughly 1 in 12 startups makes it quote unquote long-term, like to that 10-year mark. Something like 90% of startups fail in the first 5 years. And the vast majority of that happens actually in year 1 and year 2 when you just simply don't get enough signal on what you're building, and you probably give up or you run out of money, and running out of money also makes it so that it's really hard to not give up on what you're doing. And when I've tried to quantify this, and again, this is not an exact science, but I can equate roughly 75% of failure is market related, market or product market fit related, meaning you just simply don't have enough volume and velocity of a customer base to make your business viable and to succeed. And that's kind of what I set out to do here, was to put this into action. And so just to kind of quantify it, most startups fail because they don't find customers quick enough, and they don't build enough of that value for those customers to stick around even if they do find them. You hear about retention problems, you hear about customer acquisition problems, kind of lump these all together into those core sets of reasons why startups fail. Now, the good news is that these are all growth related themes. So that's the good news. I learned the hard way though. So as I alluded to earlier before, I have started and failed a number of ventures, and it was 2004. So this is one story that I'll share. And Facebook was just founded, and Flickr launches, and Firefox 1.0 comes out. Flash is all the rage. I mean, this is like the golden days, right? 2004, web standards are just forming. And so myself and a few other software engineers said, you know what, we're going to go tackle the content management market. We think we can build something amazing and put it out there and drive a ton of revenue and have a lot of fun building a startup. And so we had this amazing idea, and what our unique identifier of our core need was that we had this point and click interface. So like we built this content management system. Again, this is 2004. We built this point and click interface that people could just go in and they could just write their content and then right click and save their content in a web browser. And it was this magical content management experience. Like it felt like magic. By the way, we spent a couple of years building it. So we convince really smart people to join us. We start this startup, and it's like, okay, we can make this, the problem solution is that we can make that content production easier than ever before. And we can actually kind of make it fun. That's what we actually believed we were going to be doing. And we can price this at the enterprise level. We think we can get people to spend 10K on this. And so we spent 18 months building this product, and we get some clients. We were based in Boston at the time. Feedback was okay. People like the interface, like they like the CMS. Now we're spending 100% of our time on new feature development, supporting the things that those early customers supposedly wanted. But much of it came from just our ideas of what we thought they wanted. It wasn't actually through core customer discovery, and it just was never enough. That license cost was really, really high, and so it was hard to get customers in the door. And a year later, we were actually all out looking for consulting gigs, and we pivoted the company to do service work. We simply just flat out failed. We ran out of cash, and our product totally flopped. Well, what the heck happened? I mean, we built something that was really cool. Well, what happened was that while we were racing to build a feature set to support this like tiny group of customers we had, we missed what was happening in the market. And it turns out that open source was not only eating the world, but platforms like Squarespace were being worked on, where for now $20 a month, you can get the same functionality we were going to charge you $10,000 for. And it just did not work. And so this was a lesson that I had to learn the hard way, but I think it's applicable to all of us. Like, why did we fail? Well, the market was forcing prices down to free or cheap. The open source movement was kind of eating the whole industry. We could not build fast enough and compete against what everybody else was doing using open source. And our features did not matter. We failed to monetize those features fast enough. We didn't test enough with real customers on pricing, on those features, and with those customer segments to prove out that we actually had a viable business. Like I said, we spent 18 months building this thing, 18 months with our heads kind of in the sand, and it totally flopped. So hindsight's 2020, right? So you would think that, okay, 2 years out of this thing, total failure, like that one would never make that same move again. Well, it turns out I actually did it again in 2015, where again, I founded another company with two technical co-founders, and we built a pretty awesome, very super niche marketing platform that had customers. We had product market fit in this niche, but it wasn't venture scale. We started getting nervous. So we're like, well, we raised a little bit of money. We need this thing to be venture scale. So we're going to build a bunch of stuff that we think we can go monetize at the enterprise level. So we tried to go big. I'm actually like I'm a longtime product manager. So like we had a great backlog, we had a great process, great system, great technology, and we completely failed there as well. And that was a near-death experience for that startup. And it never fully recovered. I mean, it did recover to some degree, but it never fully recovered. And in fact, it continues to run kind of in zombie company mode, where it makes enough money to not shut it down, but it hasn't paid all the investors back. And you get to a point where you're like, what do I do with this thing? And so I certainly will not make that mistake for a third time. And there we failed because we lost focus on a core problem solution fit. So if you're in a situation where you are actually solving a real problem, continue to dig into that solution to that problem until you fully exhaust your options, because we got opportunistic and we said, we can go solve a bunch of other things for these customers, and it just didn't work. We had tons of customers getting value in that single product, and we should have gone deeper and deeper and deeper and deeper to solve their needs, not the needs from some hypothetical customer that I thought we would get demand from. And so we went too wide and we didn't go deep enough there. And we also got aggressive with pricing. So we said, well, we've built all these amazing features. We're just going to raise our prices. Guess what? Our top customers left. They got mad at us. It was a very humbling experience. I mean, I had people tell me on the phone that we loved what you were doing before, but we don't love this new model. So the point here is like, failure can come from any number of angles. Even if you're a seasoned entrepreneur and done this before, be mindful of where your blind spots are. And, what you need to think about is really important, right? If you can rejigger your whole thought process early on around solving those early needs and keeping that focus on this cross-functional holistic growth, which is kind of getting your product and feature set in front of that audience more quickly to get that feedback, then you increase the odds of success. And again, I would say that if you can obsess about providing value to a core set of users in a real market, and if you do that until you find a signal, that's how you're gonna get there. Which means that you have to iterate, you have to test, you have to measure, but you really have to be relentless in your focus of what that problem solution is. It doesn't mean you're going to find one marketing channel that's going to work or there's going to be some overnight success. But what it means is like, don't lose focus on that value Don't lose focus on finding that solution that you solve to some major pain point that a group of customers has, and that's how you're going to win. And so, not to hit it too hard, but do not overbuild. Do not overbuild your product. Okay, like think about the things that you're working on right now and what's on your product roadmap, and try to position this in terms of what is absolutely core. What are the things that we need to put out there that all of my customers or 80% of my customers go away if we don't support? Those are the things that you have to build. And that goes through this bottom stream. Like you've got this idea, you've got a backlog, you've got a sprint, you got the sprint process, and the release stuff. But the rest of it, I would strongly, strongly encourage you to use a test-based iterative approach to putting your features out there into the wild. And this is very hard for technical co-founders. So those of you that are like a solo, or you've got a couple people at your company and you may be a software engineer, this is very, very hard to wrap your head around, because what it means is that you're gonna not often build the stuff that you want to build that you've got conviction on. It means that you're getting your stuff out there in front of real customers, engaging their interest and demand. In week 5, we'll talk about kind of how to do that a little bit more tactically when we talk about experimentation. But for those of you that have been tracking Growth U for a while, I don't know if you see this from the outside, but internally, it's like controlled chaos. We are constantly testing pricing, membership models, content strategies. I mean, and we're relentless about it. We test free trial versus freemium versus no free trial. We test different access plans and groups. We test a signal that we get from a piece of content to a webinar before we build a program. So we try to just, again, because of some of our history and stuff, we really try to be very, very customer driven with that. So if you don't see that from the outside, that's what's happening internally. And if you ask any of my teammates what it's like day to day, we tend to be kind of all over the place trying to find that signal. But when we go to build something, it's with conviction because we've effectively proven out the model. That's kind of what I wanted to share there. So there's some basics of growth that I want to just kind of get through, again, relatively quickly. And this kind of starts with the definition. So let me help define what growth is, just so we quantify it a little bit. So I think about growth where growth starts by ensuring that the product or service that you have provides value to your customer the entire way through the customer life cycle. So it kind of starts like a little bit broader and it goes really, really deep. And so this is not just a customer acquisition play. This is not just kind of growth hacks and kind of doing hacky things. It's actually about providing value to somebody before they're a user or before they're a customer. It's certainly providing value while they're a customer or user, and it ensures that they don't become a former user. And if you do that really well, I think you encapsulate or embody what we talk about when we talk about growth or growth marketing. It really is a much more holistic view of the company. It's also likely that growth is going to touch every point of your business. It's at least at some point, it's going to touch every point of your business because of this, right? So like the company view of growth, when you look at the company view of growth, this is kind of you looking outside. You go from this kind of growth and financial model where you're trying to find like your basis of what you're starting from. Then you think about customer acquisition. How do we get customers into my model and flowing through my model? And then we talk about activation and product-led growth and pricing. Customers get value, they receive value, and maybe you monetize that value that you're giving to your customers. And then there's retention. There's this long-term value created for customers as they stick around. But then kind of flipping this on its head, from the user experience, the user needs to be made aware of your brand. And that's what we talk about when we talk about awareness or acquisition. And then you need to provide value to that user. And that initial value drives their interest in doing something with your brand. And we call those conversion points. And we'll talk a lot about this in week 3 when we talk about activation strategies. This is where enough value is realized by that user for some kind of conversion to happen. What are you trying to get them to do? You need to have a point of view on what you want your user to do. If you don't have a point of view on what you want your user to do, then I would pause here and figure out, like, what's my actual goal? What do I want my user to do in this situation? And then long-term value is realized. So long-term value is created for users as they stick around. And ideally, you're building compounding value as you go over time. They get more value out of the product as they experience it, or out of your service as they experience it. And that could come in the form of a better product, more stickiness or engagement, assets and materials. It could come from community. right? There's a lot of different things at stake there, but this is kind of how the user, they don't really know they're thinking about it this way, but this is kind of how they're thinking about it linearly. Moving forward, we talk a little bit about organizational responsibilities, marketing. There's kind of this line between marketing and product and engineering, and marketing does some stuff organizationally, and then product and engineering kind of take over and then own the rest. And maybe they own retention, they own the product build, and there's this line. Guess what? The purview of growth kind of spans that whole thing. And you know what? Your users, they don't really care about how you're structured. So if you're kind of like set on, hey, there's marketing and they do these things and product, your user doesn't care about that at all. You may care about it, but just think about the purview of growth is a sequence of linear loops, like it's linear sequence with a bunch of loops thrown in that moves them through a process over time. And if you do have this line in your organization right now, make sure that it's a seamless handoff from whatever you're doing up funnel to whatever you're doing within your product. Otherwise, you have a bad experience. And when you've got a bad experience, the user is likely or more likely to drop off compared to all the amazing companies who have figured out things like onboarding and done that really, really well. And again, we'll dig into this a lot more in the weeds as we go. So I think it's important to experiment to find kind of what works best for you and your culture as you go. And there are a few other considerations here, and I'm going to go really quickly. I mean, basically, if you can get to scale, it's because you've either got money, resources, you figure out your acquisition costs, or you've got strong retention. Probably luck and timing is thrown in at the end there. What does money let you do? So if you fundraise or you raise money or you've got capital or whatever, it can help you buy resources and can save you time on customer acquisition. That's really what it's good for, right? Maybe you can hire a team as well. Resources help you move faster in marketing and product development. And by resources, I mean yourself, your team, your time, your partnerships, those strategies that kick in. What these let you do is just, again, move faster, iterate more quickly. Your customer acquisition cost, or CAC, we're going to use a lot of kind of growth nomenclature. So if you don't understand what a term is, just reach out and we'll answer in Slack. CAC, customer acquisition cost, becomes a leading indicator of your main growth model and helps you determine how fast you can grow. And then retention, or the inverse of that, churn, is a company killer most of the time. And when we walk the second half of today, we'll talk about churn. We'll look at it side by side. Timing, markets shift, customer behavior changes, competitors come and go, and you can't really control the market. So think about how you adapt as you go. Growth University example is these types of long form cohort programs. They're not for everybody. Like, you're taking an hour out of your day, which we're entirely grateful for. Like, thank you for taking an hour of your day to join, but that doesn't work for everybody. And so, some of the stuff that you're seeing from us is a lot more shorter form content. It's little playbooks, it's downloadable assets, it's things that you can take and within 5 minutes, you've changed some portion of your business. And so you could get that from long form content, you could get that from short form content. It might come from a conversation. The model in the market continues to evolve and change, and we have to adapt with that, and you're going to have to as well. This matters because, again, as founders, we've got this bias towards action, but we have to really be mindful of the why. So why are we doing something rather than just on what are we doing or how are we doing it? The traditional view that used to work was, hey, here's what we're doing and here's how we're going to do it. And that's going to just be better because this thing doesn't exist in the market. Now, pretty much everything exists. Most of your companies have a peer company in a space or in an adjacent space that becomes a competitor. And so you have to understand that why. And so if you focus on that why early, why am I doing this? What's the value it provides? It's going to help you with thinking through how to acquire customers and how to talk to users, everything else that comes with that as you go.